Businesses borrowed a staggering amount in the second quarter of 2020. Could taking out credit insurance be a wise investment for you? And the government is facing significant losses on the bounce back loan scheme. All of this in the latest Business Finance Bulletin. Businesses have borrowed a staggering amount of money in quarter 2 2020. Well, that's according to new research carried out by UK Finance. Now, UK Finance is the umbrella organisation for many of the main lenders in the UK. Now, the figures from this new research have revealed that in quarter 2 2020, businesses borrowed a staggering £34.5 billion. Now, compare this now to 2019. In those 3 months of this year, businesses borrowed 50% more than in the whole of 2019. So yeah, those 3 months in that second quarter, they borrowed 50% more than businesses borrowed in the whole of 2019. So it just shows what demand for finance has been like. When you compare the borrowing in quarter 2 2020 versus quarter 2 2019, this year businesses borrowed 5 times more than the corresponding quarter in 2019. This demand for finance is high. Where's it coming from? Well, perhaps not surprisingly, 75% of this new debt is coming from the government loan support schemes, CBILS and bounce back loans. So a huge amount of money being borrowed by businesses. Where's it going? Well, it's one of 3 places. First of all, naturally, the funds have been used probably to cover losses. It's been a tough time for many businesses, and the cash that's been pumped in has been a lifeline for many businesses to cover losses and pay down creditors. The next place it's gone is actually paying down bank debt. Now, the research found that pre-COVID, businesses were utilizing approximately 54% of their overdraft limit. So if you're borrowing 100k on an overdraft, typically on average, you were using about £54,000 at any one time. Well, post-COVID, with all of this money now being pumped into the economy, that utilization rate is down to 39%. So you can see there's been a big influx of cash, which has helped keep overdraft limits down. Now, that's good news for the last quarter and going into 2021, because it means businesses have some headroom to be able to utilize if they get into tough times. And the third place where the money's gone, well, essentially it's sitting on savings and deposit accounts. Compared to the start of the year and now, deposit levels are up 20%. I know of many businesses that have borrowed under CBILS and bounce backs and are sitting on the cash, naturally being very cautious. So we can see some interesting figures there, but with this huge level of debt that businesses have taken on, they've got to be really careful that they manage their debt position going into 2021. In the previous segment, I mentioned that we are probably going to face a very challenging quarter 4 2020 and a very tough 2021. Now, if you're one of those businesses that offers credit terms to your clients, you give them 30, 60 or 90 days in which to pay, you are probably joining the other businesses who are offering those kind of facilities with a concern about whether you will get paid. Well, a trade credit insurance provider, Nimbla, has done some research, and they found that already £2.2 billion has been lost where businesses have found that their clients have gone into administration. That money is lost forever. Now, Nimbla has found that 38% of businesses said that they are still owed, on average, £59,000 from work completed and invoiced pre-COVID. And of those, 21% estimate that they probably won't get paid at all. It's a very big hit. Now, it seems that only 4% of businesses ever take out credit insurance to insure against loss or your clients going into administration. And in fact, looking forward, the research finds that about 60% of firms are concerned about whether they will lose money because they offer credit terms. So if you want to think about insuring your credits, check out the likes of Nimbla, which is nimbla.com, and other trade credit provider insurance out there as well. It could be probably one of the biggest and most cost-effective investments you make that could protect you against losing money. At the start of the bulletin, I mentioned the Bounce Back Loan Scheme. Now, the National Audit Office has just undertaken a review of the scheme to ensure it's been delivering value for money for the government. Well, unfortunately, the key finding of the report is that there is the potential for the government to lose approximately 15 billion to 26 billion pounds under the scheme. Now, this is due to businesses not paying back on the loans or fraudulent applications. There's a large amount of money for the government to have to take a hit on. So far, the latest figures show that approximately 38 billion pounds has been lent out under the Bounce Back Loan Scheme, with approximately 1,260,000 businesses benefiting. Now, the National Audit Office is assuming a default rate of anywhere between 35% up to 60%. So if that comes true, it is going to be a very significant loss for the government to take a hit on. What does that mean? Well, I guess it's going to be down to the taxpayers like you and me to fill that gap. But of course, the Bounce Back Loan Scheme did have a valuable part to play in keeping the economy going. So hindsight will be a great thing, of course, but it has served its purpose. And don't forget, you've still got until the 30th of November to apply for the Bounce Back Loan. If you're eligible and you haven't done so yet, go and check out with one of the many accredited providers. Well, that's it for another bulletin. As ever, I hope you enjoyed watching it. And if you did, please don't forget to give it a like and a share. So that's it. Please don't forget to stay well and safe and have a profitable week. And I look forward to being with you again next time.